here for how to buy and sell in an ongoing July COVID market. And we're talking real estate because this is LeAnn Riley's Real Estate Investing Club. So thank you and welcome today. And I want to just give a real quick introduction so you know who the heck is that there. Right here, we have Eric Janson today. He's our guest. And we're going to learn a lot from him. And I'm going to introduce him shortly. So hi, Eric.
Hi, how are you?
Good, good.
Good.
So today we're doing a live stream. And I always have expert speakers and leaders in real estate investing. And I use a lot of national speakers too, and you get to ask questions and participate from anywhere. And the truth is, you don't need a lot of money or knowledge to get started as a real estate investor. You just need to know the right formula, you need to follow some sort of a system, and you got to have the right realtor to be a smart investor. So I'm LeAnn Riley. I'm a broker and a real estate coach, and I lead the Encore investment team of realtors in the Twin Cities, Minnesota. I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. Oh, how I want to travel now. Anyway, as a national coach and trainer, I help ambitious people build wealth as real estate investors with my proven profit formula coaching program. And I provide free education just like this webinar or live stream here today. And that's with my LeAnn Riley's Real Estate Investing Club, and anybody can join. It's free. Just stock full of education. So I'm really glad you're here with us today. And now I want to introduce my guest. So today our guest is Eric Janson, and he is a realtor on the Encore investment team. I'm the leader of the team. He's one of the team members, and he's also the owner of Right Score Credit Repair. Mm-hmm. He has a ton of experience with rent-to-own and lease options and wholesale deals, and really just helping people get into homes or investing. Right?
Yep, that's for sure.
Okay, and I always tell how I met these guest speakers, and I want to tell the story of we first met when we were both helping out a local investor who was a really great deal finder. He was a fix and flipper and a turnkey provider. And just for anybody from Minneapolis, his name's Nate Armstrong, and he brought us together. And what I found is Eric is really a resourceful guy. He can figure stuff out. And you know what, as a realtor, that is like critical because we're problem solvers, aren't we?
Yep, for sure.
We really are.
A big part of it.
So I say he's resourceful, he's really smart, and he's clever. And we really enjoyed working together. So I'm really excited to have him on the Encore investment team. And he's our go-to man for rent to own and for credit questions, really. And he helps a ton of first-time home buyers. Yep. And he's going to talk a little bit about that today, okay? So just welcome. And I don't want to forget, there is a couple other agents on the Encore investment team, and I just want to tell you who they are. It's Tammy Love. She's a detective. That's where she's really shines. And we have a new member. His name is Gary Keeker, and he's a financial whiz. So all of us are entrepreneurs. That's one of the things about the people on my team, because a real estate investor is an entrepreneur. So just a couple logistics today about the meeting, okay? And there's a chat box, and that's where you're going to go to be able to ask questions, is in the chat box. So Eric and I will be bantering, and you can go ahead and put your question in there, and we'll try to answer it for you, okay? And then the second thing is first we're going to give you some fundamentals about what's going on in the market. So, but go ahead and put your question there and we're going to try to keep track. Okay, and before we get started, I want to take a poll so I can see who's here on our call. So if you just watch on your screen, I'm launching a poll here. And the question is, what type of real estate investing interests you? And I have a lot of different strategies here, and all you can answer more than one or whatever. So go ahead and answer the poll, because that way we can be sure to be talking to our audience. So I'll just give you a short time here. I see people answering, and we're coming up with, we've got some, I'm going to end the poll now, and this way you can see the results. Let's see, share results. There we go. We got some people who are wanting to learn how to get started, fix and flippers, some buy and hold. House hacking, that's when you move into the investment property and pay less money down. And the BRRRR strategy. I really like BRRRR. Somewhere, and no realtors today. A lot of times we have realtors on here. Okay, I have one second question. Let's see here. I got to go off of this poll. There we go. I got another poll, but uh-oh, where is it? I don't know, Eric. This is, I guess I can't, my second poll, let's see, in my edit button, nope.
Well, while you're looking for that, I'll say I actually met you before.
Oh, you tell us.
Yeah, so I actually attended a live event that you hosted probably about a year before we actually officially met. So again, I was like everybody else on this call, is looking for information, looking to learn what I can learn. And first time I was introduced to LeAnn Riley, she was speaking, and that's how I first got to know her a little bit on my end. So.
Okay. See, I didn't even know that you came.
Yep, I came to one of your events. Yep.
That's pretty cool. The second question we were trying to ask you guys, maybe you can just put the answer in the chat room, is all we want to know. We're going to talk about selling and buying real estate in a COVID market. So we were curious, are you an owner occupant searching for something to buy, or do you have something to sell? Or are you an investor looking for something to buy, maybe to fix and flip, or something to sell? Like, one of the things I heard, Eric, lately is people who had Airbnbs, you know, they kind of had a dry March and April, right? And maybe into May.
Yep.
So some of those Airbnb people are selling, and some are turning them into long-term rentals.
Yep. Yeah, for sure. With all the travel, everything kind of shut down. My wife worked for Delta, so I know that all too well. And yeah, it still hasn't obviously recovered, but it's better than it was a few months ago. But there's definitely took a hit there.
Well, and you know, 2 weeks ago I ventured out with my family for our annual trip that I take them on, and we went to an Airbnb in northern Minnesota. So I had cabin fever, and we went.
Yep.
So, okay, looks like we're ready to get going. So the first thing I'm going to talk about is actually the changing market that's going on. And have you ever, probably if you're studying real estate, you heard about the V, you know, just like a V, or a lot of times they called it the check mark. Like a check mark. The real estate world was at one place and it was diving in March and April, but it was a matter of when's it going to hit the bottom, right? And so that would be the V recovery. Are we going to have a V recovery? Or, and so here's the thing, we hit that bottom already and we're going up. That's exciting. You know, we're already, if you look at the statistics, June numbers, they're not even really out. Real estate numbers come out kind of late. like 3 weeks after it happens, but they have gone ahead and released some of the June numbers from the last even few weeks. And I've studied that. So I want to share the screen, and I'm going to show you something here. Here we go. What this shows here is about the market and what it is.
LeAnn, there's nothing shared.
Oh, okay. Thank you, Eric. Here we go.
There you go. Got it now.
Here we go. There's an affordability squeeze going on right now. You can see that here, where the houses that are under 300 are considered affordable. And there's a squeeze. 22% of the homes under 250,000, that's all that's available on the market. That's not very much. And in 2012, this is just an example, 70% of the homes fell into this affordable category. Think about that. And we only have 22% to choose from right now. In 2008, that's our real estate bubble, we had 52% to pick from. So guess what? Low inventory, folks. The middle market is where the sweet spot is right now. There's inventory available in the middle market, and that's where you're seeing the activity. And the middle market here in the Twin Cities, which might be different from some other place as far as dollars, but I think you can still stand with middle market. Here in the Twin Cities, middle market is 300 to 500. Okay, so that's where you're seeing the activity. And down here, the affordability is affected because these are the people working in restaurants, which is the largest unemployment, okay? And those are the people who lost their jobs and they can't work from home. Those are the ones on unemployment, and they're the ones who might be stuck. I think Eric is going to share with us a lot about forbearance and what's going on there. I think a lot of people in this affordable category fall into that right there. You can't exactly get a mortgage. Am I right here, Eric? You can't get a mortgage if you're unemployed.
You can't. Nope. Not even if you're furloughed. You can't get a mortgage. So.
Yeah. So it stalls your home buying process if you were in there, right? And then we have this weak supply. So can you imagine how many people are trying to buy that one condo that comes on for 180? A lot of people. So and then in this luxury, this is kind of interesting. The luxury market has a little bit of an uptick, more on the 500,000 and 600,000. And David Arbit is where I got these statistics from the Minneapolis Area Association of Realtors. And, you know, the stock market has gone up and down, but there's sort of a perceived wealth and there's some confidence in that middle market. That's the people who were salaried and they're working from home. All right. And then we have, let's go to the next slide here. This is about showing activity. And what's interesting here is higher on a weekly average, okay, right now, higher than 2019. So if you looked at 2019, this is the last 2 weeks of June, you can see here. Blue is the week ending 6/14, gray is 6/21. And this shows they were 7,500 homes in this range were shown during that week, okay? And you can see it's this middle market right here where the real action is, right in here, 250 to 299, and it goes down. I thought that was really interesting because this is what both Eric and I are seeing, right, Eric? We're seeing showings. We both had some listings recently and they're hot.
Mm-hmm. Very much so. Yep. It's like you said, it feels like spring market.
It does, yes, it's a late.
Not surprising at all to see this data.
Yep, late spring market.
Mm-hmm.
So the forecast is less buying in that affordable category because there's no inventory. Luxury will still be slow, and that middle category is steady Eddie. Okay, I got one more slide from him, and this one is really cool. This is the daily pending sales from all the new listings. And this chart is all of 2020. So the black line is 2020, and we started the year lower, but here's the real clincher right here. And this started, looks like around June 4th. We just had a major uptick in pending, and this is cyclical, to other years. Look we followed the same cycle, but we are like way up for over the last 4 years. Now that is interesting, right?
Mm-hmm.
This shows how much buyers have come back. The highest in 4 years. That's amazing. You had enough time at home to figure out what you wanted, right?
Right. It's interesting looking at too, where March kind of hits and the black goes down and stays down, and then it just kind of trickles along for a little bit,
Yeah.
and then it starts to spike. And if you see some of those blue ones in the back here, around April it spikes. So that's what we're talking about with this spring market. It's just everything's shifted.
It shifted. But boy, and it's funny, we had 1 week, or you know what? That's Memorial Day weekend, this thing right here, this big spike. But then, wow, look at it go. So here's the thing, real estate is leading the recovery. Buyers are back and sellers are still behind. We don't have enough inventory. It proves how tight the market is right now. That's what we just looked at. Okay, I'm going to stop that share, get you back to Eric and I. So I want to go back to talk about that V. Okay, so the housing market is already in a historic rebound. We just saw it right there on those numbers. And that V started showing in June, okay, with upward activity. The bottom was in April and May, and no wonder with us all in lockdown, right? But the big question is this V going to turn into a W? Okay, we already had the down, we're going up, and guess what the W is about? Eric, you got a guess?
Foreclosures?
Nope, it's about the coronavirus.
Oh, yeah,
numbers going up.
But that adds, yeah.
So now the numbers might go up. Okay, maybe we got to stay home more, and we could end up going down like a W, but then spiking back up. So we don't know that answer because the numbers, as we know, are rising in Florida, Texas, Arizona. They're rising a lot of places right now, fortunately, in Minnesota. And just so you know, this is July. What do we got? This is the 8th that we're recording this with our July predictions. So right now, Minnesota is staying pretty stable. Okay, so again, this W could happen depending. Coronavirus is kind of running some of this, right? It's if people are afraid to go out shopping. And here, I know you're probably wondering this too. How come I can still say we have a V-shaped recovery? And I just want to tell you why I can say that, because we have had 4 weeks straight of the highest level of double-digit growth in purchase applications in 2020, more than the whole year. We've had 4 weeks straight going up. Okay, that's one of the indicators. Another one is we have the credit flow. If you I don't know if you remember, but I talked about it when I made my first Shifting Market COVID video. Credit started to get really tight, right? In like early April, all of a sudden they were even calling people's loans in. You couldn't do a cash out refi. Things got really tight. And so that's another indicator, economic indicator of an upward market, is when the credit flow opens up. And Eric, we're going to talk about that kind of around forbearance. Low FICO scores you couldn't get a loan before. FHA kind of locked up for a couple of weeks there, but then they opened up again. if we have another credit tightening, that can cause a W. You know, it's temporary though, just like we saw now that it opened back up. And one really cool thing, we don't need to worry about the mortgage rates. They are low, 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 low,
Yep.
right? And that's going to be part of the rescue, along with just confidence and a decrease in the COVID cases. That will make that W go back up or our V stay up. So those are the indicators, okay? So the real thing about the market that Eric and I are seeing is low inventory. And for us as realtors, what that means is, what do you have to do if you have a buyer, Eric?
A lot of work. Yeah.
You have to show them a lot of houses. And this is where it's important to have a really smart agent, because you know, it starts the moment you even go look at the house. It's because when we're going to negotiate for you, it's about our relationship with that. It's kind of like dating. Our relationship with that other realtor, it's really important, and it starts the minute we make that appointment.
Mm-hmm.
And we've learned how to culture that relationship, because boy, if you're going to make an offer, you better have the details and be able to communicate.
Yeah, you want to become their friend.
That's right.
Yep.
That's right. And you know, so we're seeing the tight market if we have a buyer, but both Eric and I can talk more. But you had a listing right in the smack of the COVID, right?
It was right when the lockdown pretty much ended is when the listing went live. So kind of good timing, because it just kind of worked out that way. It wasn't really planned. It just, that's when the house was ready. And yeah, it went pretty fast, sold in 4 days. So yeah,
I know, and it was
the first person who looked at it actually bought it. So
that's pretty good. Sold in 4 days in the middle of a pandemic. That means, you know, that's pretty good for real estate. We were blessed here in Minnesota that we didn't have to shut down real estate. We were able to virtual show places, things like that. So, okay, so let's see, what else do I have here? Yeah, we said the spring market is late. I got a great question here. See if anybody wants to chime in. And what do you think about this? I said something on a blog post or somewhere that I had read that people are, you know, considering COVID, and then what happened in Minneapolis with the rioting and, you know, all the property destruction. There's a little bit of an influx going out to the suburbs. But my blog post created a lot of controversy, and a lot of people said, no way, that's not happening. What do you think?
you're saying there's people moving out into the suburbs?
From the city.
I have actually an example of that. I'm working with a buyer right now. They're getting their pre-approval and all that set up. But he's living in Hopkins. He was planning on moving to Uptown. Him and his wife are going to move to Uptown, and they were going to rent a place there. With all of what happened, unfortunately, in Minneapolis and everything, they are now deciding to move out further away from the city and buy a house. So,
yep.
Firsthand see that happen.
Firsthand, there's somebody going to the suburbs. And I also have a friend who has lived in the Lake of the Isles area for years, and then the Lake Nokomis, South Minneapolis area, and they kept their property as a rental in South Minneapolis, but they moved to Eden Prairie. So there's somebody moving out to the suburbs. So I think some people don't want to live in that. I also saw in David Arbutt's presentation, condo sales are down a little bit, because that's, again, the tight living. People want a little space to breathe.
Mm-hmm.
Okay, so let's see here. I think that covers my market update. So I think I'll end with just sort of one more thing about the market, and then we're going to talk more about forbearance and that other side and what buyers want. So here on the bright side, we also have potential for the stock market is kind of going up and the economy is starting to recover. But what's cool is real estate is sort of leading it. And I always go with the belief, you know, my stand is single family and small multifamily is really a fairly safe category because people need homes, period.
Mm-hmm.
You've got to live somewhere, and it's reliable long-term investment category. It just works. And, you know, one of the other things I just want to say, I know a lot of commercial property owners, and well, obviously anywhere in downtown areas in any large cities where there's been rioting and trouble, those commercial businesses, it's a problem. And, you know, some of them got burnt down even and all that. But their commercial is not as stable right now as single family residential or small multifamily. So it even when the economy goes down, it's stable. So let's see. Inflation is low right now. That really helps. We've had really great economic and job expansion in, you know, coming right up to this. And now the virus is kind of putting a hole in it, but we're holding, I guess we could say. There's short-term damage to the economy, a lot of it, and we don't even know what the result's going to be by any means, right? But at least the purchase application data for housing supports a recovery. And, you know, two big things in housing, you know, this isn't 2008. We don't have subprime lending. We have super duper low mortgage rates. And we have the demographics of people, the ages, the millennials, all that. We have that. We have demographics and low mortgage rates. And it's a seller's market, not a buyer's market. And it was a buyer's market back then. Those are the factors that are going to save us. So the other thing I just want to end with there for the market is, you know, what I just hope for all of you, good health, and that you have work, and we all want to walk the earth freely. So anything to add, Eric?
No, I think you covered it pretty well. I mean, it's you know, we can try to have a crystal ball and see what's going to happen. We have some thoughts. Obviously, we'll have opinions on what things are going to happen, but then, you know, COVID spikes and again, and, you know, things may change again. So nobody really knows for sure. This is obviously a different time for all of us in the whole world that we've ever, you know, never really gone through before. So we're guessing, but we're educated guesses at some of it. So yeah, good information.
Okay. So let's talk a little bit about what do buyers, we got some questions here. I'm gonna keep going. You see if you can read that question, Eric. But what I want to talk about, what are buyers looking for? Here's what we're seeing. They still want move-in ready. And they want, you know, which for, like, I listed a vacant house recently, but I made sure we took photos when there was furniture in there, because that gives, people buy from the photographs these days, and that gives then they can see what the space really looks like rather than standing in an empty room. Okay, the other thing that COVID has brought forth, people are now looking for a home office, or they need an extra bedroom, because guess what? They've been working on top of each other. Maybe husband and wife are home together, and you know, one's working in the bedroom and one's in the living room because you're all on Zoom calls, right?
Yeah.
And that can get really crowded really fast. The other thing I've seen is people, I had a lady I did an open house the other day. She came with her son, and she said, normally I live alone and I'm looking to buy a house for myself. But guess what? Now I've got 2 college kids living with me, and she didn't know the answer to how long will those kids be there, right? We don't know that. But, then I, as the agent, just said, well, luckily there's room for that third kid, even though there isn't a third bedroom. There's another separate sort of room. So people are looking for home offices. They're reconsidering the open concept because now they're wishing they had some doors on a room to make the office in or to have a private space. So they're looking for more bedrooms, and people, they want granite counters and all those kind of finishes, right? People are looking at the finishes. So the other thing about buyers, you have to be ready. And when I say ready, that means, you better have a pre-approval, which I prefer over a pre-qualified letter. You better have, you have to be ready. If it comes on the market, you better go that day, right, Eric?
Yeah, for sure.
Don't go, you can't book it 2 days out. It might be gone. I see things gone the same day.
Yep.
The other, there's more things as far as credit and, being ready. The other thing you have to be ready for emotionally, you need to be ready for a quick decision.
Mm-hmm.
I know a lot of time in a slower market, you can go home, you can sleep on it, you can talk about whether that's the right house. Here, you've got to decide, because if you want it, you better go in.
Yep, for sure.
And then the other thing is contingent offers. I had that happen. I put a house on the market last Monday at 5 o'clock. And by Wednesday, I think I had 6. I called for highest and best. By Thursday, I had 9 offers. So that's hot. And the thing is, a couple of them were contingent on selling of a different house. Okay, some were already under contract, which that's okay. You have to state that if you haven't closed on the other house. But one was contingent on listing, so that fell to the bottom. That's just my point.
Yep.
It makes it harder to buy when you need to be listing your other house.
Yep,
Okay.
for sure.
Yeah. All right, I want to hear about forbearance, Eric, and what's going on?
So first off, I guess I would say just what is a forbearance? Some people might not 100% know what that is. And basically it's a temporary suspension or reduction in your payments. So you may have a mortgage, you're making mortgage payments, you maybe have a job, COVID has you unemployed, you can't make your mortgage payments. You then work out with your lender that you're going to basically suspend or reduce your payments for a temporary period of time until you can get back on your feet, get your job back or whatnot. So there's a couple of things that's going on with this, and I think this is important for investors to really listen to, whether you have a house and you're thinking about this as an option, or whether you're just looking to say, maybe I want to buy something as an investor, and will this have an impact? Maybe it will. So just some statistics for you as far as forbearance. Right now, you can Google forbearance and see how many forbearances there are in the United States right now. And it's a crazy 8.8% of mortgages are in forbearance right now. So, with the CARES Act giving you the opportunity to do a forbearance, and then there's other things going on, especially locally here in Minnesota, where you can get forbearance. Right now, 8.8%, which is 4.7 million people, have gone through in a forbearance right now in their mortgage. So, and then if you look at that and you have this unemployment that's happening right now, where you've got this extra $600 a week that people are getting as they're unemployed. Some people are making more on unemployment than they were working. That's coming to an end right now at the end of July, unless something changes, unless they go back to Congress and they figure something else out. That's ending here in the next couple of weeks. So, kind of looking at that, you lose that money, you're in forbearance, what are your options? And can you then keep your house, and are you going to go into foreclosure? So I kind of want to talk about what the CARES Act is, what's going on here locally a little bit, and see, what was going on with that. So the CARES Act, that was passed back, several months ago, and it gave us all stimulus checks, and that's where the $600 unemployment came from. But it also gave people the ability to do this forbearance for their mortgage. It gave them the option to forbear their loan for up to 180 days. And then if they were still in issues, they could go another 180. So they could do up to 360 days on that. Now this is on federally.
A whole year.
Yep, they could go up to almost a whole year if they're in a situation where COVID is affecting their income, and they can show that. They can extend it up to 180 extra days beyond the 180.
When you say COVID affecting their income, are you talking somebody in family gets COVID, or are you talking the restaurant's closed down so I can't work?
Potentially both. It's really, you'd have to talk to your specific lender. It's by lender, but they've kind of made it fairly easy. When you were going to do a forbearance before, it was very difficult. You had to show hardship. You had to show all kinds of documentation. What we're hearing now is that it's a lot easier to potentially apply for a forbearance than it was before COVID. So again, it's lender by lender, but that they're making it a lot easier for anyone to really get it.
When they first announced it, I know people that just automatically said, well, yeah, and all you had to do is make a phone call and okay, you got a letter. But I caution those people. I think I had someone on credit or mortgage, that sounded like a good idea, but then there's a back end to that.
Yeah, there is for sure. And, I've heard the horror stories of once their forbearance is up, they got to pay the whole amount. Now the CARES Act set it up where that is not necessarily the case. But the CARES Act doesn't cover all mortgages either. It only covers federally backed mortgages. So if you're in something that's not, you could still do a forbearance potentially with another, lender or whatever, but you might be in a situation where they want that lump sum right away. That's a possibility. The way the CARES Act is set up is that they won't be requiring a lump sum when your forbearance ends. You could do that if you wanted to. You could pay it over time. It could go to the back end of the loan, but there's no penalties, no fees on it. So, and they set it up from a credit repair standpoint, your credit and credit repair standpoint. From your credit, they actually amended the Fair Credit Reporting Act, which is important to credit repair.
And this is passed, this amendment.
Yep, Congress amended this back for the CARES Act so that these forbearances wouldn't negatively impact your credit. Now, if you were already behind before this and then you tried to go down this road, no, you're still going to get negative marks on your credit report. But if you were current and then you went into forbearance after COVID, you had a reason, you went forbearance, then this will not negatively impact your credit report. However, they do say in there that if you do apply for a loan, there may be some impact to that. So it's not a negative impactor. It doesn't hurt your credit score, but it's going to be noted in there, I'm sure, where it says, you went through forbearance, and lenders might look at that and go, well, so I think they kind of put in there to kind of cover everything, but they definitely did amend things to make it so it's a little bit easier for people to do it and then kind of get out of it on the back end.
Okay, so to me, when you say that, there's kind of two things. A lot of investors have been asking me, are we going to, if we just hold out for 3 months, 6 months, even though it's low inventory, that's when the deals will be here, because these people will be getting foreclosed on and they'll want to sell. And especially if the bank owns it, then the bank doesn't always want the full price. But I haven't seen that in the last few years. Banks figured it out from the last downturn, and they know to bring in those asset preservation people to fix it up enough to get a better dollar. So, I think there will be deals, and that's because there is always a deal out there. And it's usually right on the MLS if you know how to look and if you know what you're looking for. So I believe there'll be deals, and there will be people who thought everything was okay and all of a sudden it wasn't. Like you said, maybe they don't have a federal back loan, or, they think they're part of the mass and then they're not.
Right, and it's individual people too. I mean, you can do forbearance and you can do, you do some of these things right, but if you're kind of living paycheck to paycheck as it is, and then all of a sudden you got to figure this out, and maybe your lender's saying, hey, we want additional payment on top of your payment, and I can't afford that. And then another thing to think about too is your taxes and insurance. Now, I've read that they'll actually the lenders will actually pick up that while you're not making payments, but they're going to want that money back. So there could be some possibilities of people getting into some hot water. I think we're going to see some more, in my opinion, I think we're going to see a little bit more foreclosures pop up once this kind of all settles down and you get through some of these forbearances. It could be 6 months, it could be a year. Minnesota's doing something as well with other financial institutions right now. There's 31 just started in July where they're doing forbearances. Now, these are the ones that aren't covered under the CARES Act. They're allowing a 90-day forbearance, pretty much the same terms. You're not going to get hit with a lump sum. You can kind of make a repayment or kind of can go to the end of your loan, no late fees and no negative impacting your credit again. But again, same situation. If you're not managing things properly and you don't, communicate properly with your mortgage. I mean, there's gonna be people that did that too. I mean, I know a woman that asked me, hey, what do you think? My mortgage is due April 1st. I heard you can do a forbearance. Should I just not pay my mortgage? This was back in April. She asked me that question. I said, yeah, pay your mortgage. So there's some people out there that just almost automatically thought, I just don't have to pay because of COVID. I don't have to do anything. I just don't have to make any payments. So you're going to have people that are just going to trip themselves up that I think are going to lead to some foreclosures that we're going to see here in the next 3 months, 6 months, and even a year.
Now, so you said Minnesota has a program. So if you're from another state, check your state. In fact, Minnesota had another thing that would help landlords called deed. They had only a week and a half window of a program of funds available, but if you weren't paying attention, you missed it. It's already gone. It worked for some landlords, so that's interesting data there that the state came out with some. So what, is the state going to pay the mortgage company? I don't get it. How's the state get involved?
I don't know. They between the governor, the lieutenant governor, and the attorney general, they worked out something with these. It was 31 institutions. If you're from Minnesota or you're just curious about it, you can go on the Attorney General's site through Minnesota. It has a list of all of the information about it. It has a list in the bottom of all of the financial institutions that are participating in this. I think some of it's probably to help. I don't know if they're getting money from the state. It didn't really say that per se that I saw, but I'm sure there's something in there for them. I'm sure the banks aren't just going to do it from the kindness of their heart. So they're getting paid at some point for it. So.
That is great. And no late fees either. I mean, it's kind of like COVID throughout the whole time. We had things unfolded, like the PPP plan for assistance for small businesses. It came out and then the rules changed and then they changed and then, a lot. That's what's kind of going to happen to forbearance. It's moving.
Yeah, you're seeing that in everything. I mean, this forbearance thing in Minnesota, it just started July 1st. So that's just new. That just came out. When you're looking at getting a loan right now for a property, like you had said, all the requirements had tightened. Now they're loosening. Things are changing daily. I was just talking to a lender that we used yesterday, and he said things change daily. I mean, every day he said it's getting better. So it's constantly, I mean, it always changes, but it seems like it's really changing and it's going all over. You don't know which way it's going to go right now, but there's definitely programs out there for people. So if they do it right with the forbearance and they keep, they make sure they follow a budget and stay on track and all that, they could come out of it okay. It's just, my fear is too many of them maybe did it thinking, oh, I just don't have to pay my mortgage. This is going to be great. And that might really come back to hurt quite a few people down the road. We'll see what happens. So.
Did the mortgage guy say anything? I'm curious because I had a client who wanted to get a cash out refi on a piece of property, had a lot of equity in it to be able to buy the next investment property right now, you know, but they weren't easy to get, and banks were even, but didn't even want to give a home equity loan on the old
Yep.
terms.
Yep, that's exactly what he said. He said cash out refis are nearly impossible right now, and if you do get one, you're going to take a hit on interest. You're going to be paying a lot more. Some people that might still work out for, he said, but otherwise it's really difficult for cash out refi right now. They just don't want to do it. So
Yeah.
yep, for sure.
Okay. Anybody got any questions? You know, hit us up here. We got some time to answer questions, ask us about realtor stuff, market things, anything you want. I'll comment on Doug here wrote that, and I know he's from a different state. I like this. Barron's report says it's going to be the mother of all bidding wars.
Mm-hmm.
And that is what we are seeing here. It's great for a seller. So if you're thinking of selling, give us a call. We can get you some top dollar. You know,
sure.
My theory for someone who maybe you are on the edge financially and you did this for forbearance, you know, you might come out ahead if you put your house on the market, sell it now at the top.
Yep.
Take that money, go rent somewhere for 6 months, maybe 1 year, and you might be able to get yourself a good deal. Because this is not going to stay forever at this top tight inventory. You know, in real estate, this is, you know, I always say buy low, sell high. We're in sell high territory. So if you're considering selling even in the next year or so, bump it up. It might not last that long, but it's here right now.
One thing I want to talk about, I remembered you were talking about with unemployment. One thing that to note that the lender did talk to me about yesterday as well was whether or not, so there's people that are getting laid off and they're not going back to their job, and there's people that are getting furloughed and they're temporarily laid off and then they're going to go back to their job. He's saying that the ones that are temporarily laid off, they just need 2 weeks of pay stubs and then they're good again. They don't need to be at a job for an extended period of time. But if you're laid off and you're laid off for over 30 days, if you can keep it at 30, you maybe do the 2 week thing again. He said, but once you go over 30 days, you're going to have to be there 6 months at your new job.
Oh,
so there's a difference between kind of getting furloughed and being temporarily kind of laid off and going back to your job, and then just getting laid off and not going to a different job as far as being able to be approved for a loan. So
see if I got that right. So if you were laid off from a restaurant, because most of them laid people off in furlough because they didn't know when they'd open.
Yep.
Basically, you can't buy a house now for about 6 months.
Yep. Yep. If you've been laid off over 30 days, you're pretty much gonna have to be at that next job for 6 months. You know, through him, but 6 months to be able to get a loan. Yep. Get approved.
Okay. And now we have a question here. What if my credit isn't so good? Now, yeah, what do you do? That's the other thing. I thought that, didn't they sort of raise what you needed to get a loan? You know, like it used to be, you know, he could get you a loan at 640 or 620, and then they were pushing that up. So
yeah,
what
he said that they've loosened that quite a bit now.
Okay.
He can get approval at 580 for an FHA.
Okay.
As long as you have 2 months of payments in reserve. So that's kind of the low is 580, and you have to have 2 months of payments in reserve, and then you could potentially get a loan. I mean, obviously there's debt to income and all that, but you could potentially get a loan then through FHA through him.
So tell us about, you know, credit repair. You know, we got a little ding. How do we fix it?
Yeah, I would say the thing to do is first off, you're going to want to get your credit report. You're going to want to see what's on there, see where you're at. If you've had negative items, you've had late payments and things like that have happened to you recently or in the past. You know, one thing also to note about the CARES Act, it doesn't just cover mortgages. It also covers other loans and credit cards. Now, if you have issues with your car payment, maybe, you can do a forbearance, so to speak, on that as well. You can negotiate with your lender some different payment structure for that. As long as you're doing it, you didn't have late payments before COVID, and then you're now trying to do it after the fact. If you're current and then doing that, it won't negatively impact your credit. So anything COVID related that happened to you during COVID, as long as you communicated to your lenders, credit card companies, whatever beforehand, those things won't impact your credit score. But if your credit score did get impacted before COVID or during for whatever circumstances, first thing I would suggest is get a credit report. Go to annualcreditreport.com for a free credit report. Look at that credit report and see if there's items on there that are, errors. Look for errors on there. 80% of credit reports have errors. So if there are errors from that, you can dispute that with the bureaus or with the creditors to get those items taken off of your credit report. The other things, big things to do is obviously make every payment on time. That's a big key factor that makes up 35% of your score. And the other big thing is your credit utilization is a big one that can help you with your score as well. To try to bump your score up to get you to a point where maybe you can qualify for a mortgage. What I mean by credit utilization is if you have credit cards, it's for credit cards. So if you have a credit card and you have a available balance of $1,000 and you have $500 balance on that, you're at 50% utilization. So if you use 50% of the limit that you have on your cards. Good rule of thumb is to try to stay below 25%, but you kind of want to stay above 0 because they want to see that you're regularly using the cards and that you're active. So if you can stay below 25, between that 0 plus to 25, that'll help your score get up a little bit as well. Some of the things you can do that with is you can ask for your credit cards, ask for your limit increase in case you can't pay it down. The other thing you could do is pay it down, obviously. So those are some things. And then some people think, well, I don't want to use this credit card anymore, I'm going to cancel it. That hurts your utilization. It can also hurt your length of credit, which is another factor, but it doesn't factor as much. But your credit utilization, if you have 2,000 and you cancel a card that has 1,000, now you only have 1,000 available. And if you have a $500 balance, you went from 25% of 2,000 versus 500 of 1,000 would be 50%. So canceling cards can definitely negatively impact you as long as
I have a question. I got an email, or maybe I got a letter in the mail from one of my credit cards. It's from a clothing store that I go to very often. And they said, I have a 0 balance. I've had a 0 balance for a long time, but they said they're going to cancel my card unless I use it by July 18th.
Yep, that does happen. That's why I'm talking about make sure you're using it regularly, because if you don't, they could cancel that, and that can really negatively impact quite a few, your credit utilization for one, because that'll go down, your mix, because now you just lost a credit card, so you might not have a good mix of credit. And
They're
then
forcing me to shop online.
Yeah,
That's
why I'm saying you don't really want it at 0 per se, because it doesn't look like you're doing anything. You want a little bit of balance, pay it off right away. You just have to be disciplined with it.
That's interesting because, I operate I use credit cards, but then I pay them every month. So what you're saying is me paying it to 0 every month, then I still don't look good because it's always 0.
Yeah, I mean, if you don't trust yourself, if you kept a little bit of balance on there, it's actually a little bit better. But as long as you're using it, that's the most important thing, that they won't cancel it on you. So that's really, really the most important thing, is just not have them like you had where they were going to go cancel it on you. So that's what you want to avoid. So
interesting. Okay, and now one other thing I forgot to mention. So I think we answered is there a way to fix it? The other way, Eric, you can tell us about your credit repair. I'll just throw that slide up. So what do you do?
Yeah, for sure. So like I said, I gave you some pointers on what you can do to help improve your credit. One of the things I talked about was disputing errors on your report. Again, I said 80% of credit reports have errors. That's kind of what I do with creditrepair.com. We go through and we look at and see what errors you have in your report. you know, how those can be disputed, and go to work to take those off of your report so that'll bump your credit score up. So that's biggest thing we do is dispute. Plus, we'll give you coaching and guidance, kind of like I was talking about with credit utilization, and you know, the different types, the different aspects that make up your credit score, and how you can utilize that information to help you get a better score. Biggest thing is you know, obviously paying on time, but there are other factors in there that can help you as well.
Okay, and so if someone, you know, contacts you, do you give like a free consultation or something?
Yep, that was the next part I was going to say. So if you go to credit repair or rightscorecreditrepair.com, there is a link on there where you can click on there and you can ask for a free consultation, and then we'll go through, we'll look at where you're at, see what advice we can give you and what we can do to help you out. So and see if, you know, it makes sense to work with us or not.
Okay, that's great. So, and the other thing, I've learned a lot about credit repair from Eric, you guys. So I just want to share one other cool thing. You know, once after I had a divorce, I had to go get some credit repair help because I didn't know how to get something off of there. And I remember the place I went, they charged me like a lot of money in one flat fee right out of the gate. I had to pay them that money, and then they promised to take care of it. And this is just what happened to me, guys, and maybe it happened to some of you. Then 2 months, 3 months, you know, whatever went by, nothing was happening. And I had to hound them, and I practically had to do it myself. They kind of told me what to do, and I figured, hey, I paid you guys the lump sum. You're supposed to make it go away. So it wasn't the greatest experience for me, and I know you're different than that.
Yeah, actually, you know, them taking a fee up front is actually not part of the law. I'm not supposed to be taking a fee up front. There's ways, obviously, around it, but you know, my company is licensed with the state of Minnesota. It took me several months and a lot of money and time to get licensed, so I try to make sure to do everything correct. So the way it works with me is if, you know, you're interested in working with me to help get those negative items off your report, I don't charge anything until that happens. So you don't pay me a dime until I do the work and prove to you that I can get those off. So I get paid for
really
what
like
I do,
that.
not up front. It's not like you pay me a bunch of money and then hope something happens, and then you pay me. So that's
I like
how.
that. I like
Yep.
that a lot. Okay, one more thing. Go ahead, any more questions? I do want to say, I see I forgot one more thing about you people who are investors. You know, one of the things, and Eric, you had the date on this, the moratorium, that's what they call it, right, on mortgage and eviction is, I just read in an article in New York, they extended to August 20th in New York. And, you know, that's where COVID really hit the worst first. So that means, you know, you can't evict anybody. You can't, yeah, it really limits landlords in what's going on. You know, you can't take them to court for non-payment of rent. So in Minnesota, it's coming up, right?
Yeah, actually, they had extended it, so it wasn't June, but now they've extended it. It's right now. It's set for July 13th. So,
Okay,
that's
so
where we're at right now. It might get extended again. I don't know. So you have to pay attention to that and keep an eye out for that one.
here's the good news, though, and I've looked nationally, you know, there really isn't a COVID rent collection crisis. It hasn't happened so far. I know in my program, I teach people who have investment property, you know, you have to be proactive. You have to communicate with your tenants right away if they're not paying, work out payment plans. And, you know, there's tools way back in the beginning. And again, back to the state here in Minnesota, we're blessed because if your tenant couldn't pay as a landlord, you could provide them where to go on the web or what agencies, and they would help them and pay their rent. So if you're an active landlord and are checking, there was ways to get that money. So it's kind of exciting that, you know, they predicted, oh no, everybody's not going to pay, and then the landlords can't pay their mortgage, you know, but that hasn't really happened. You know, even people who own multifamily syndicates, I was looking at their numbers. They means they own some big multifamily properties. Their collection is in the 90s, which it normally is there anyway.
Right.
So we're not seeing a crisis there, which is really great. So, okay, we have covered, I don't see any more questions, and we are on the hour for 5 o'clock. I got one more thing here. I'm going to share screen one more time. And I want to talk about, whoops, wrong way. 2 things. You can join LeAnn Riley's, did I share? No.
Nope.
There you go. My real estate investing club. I also have a Facebook group if you want some daily comments about investing and what's going on. You can look on Facebook under LeAnn Riley's Real Estate Investing Club and find it. And the other thing is, I'm going the other way, if you want to schedule a free strategy session and talk about buying or selling or investing real estate, you can schedule one. And if you go to my LeAnnRiley.com, you'll see the link, or right here. Hopefully maybe Jeannie can put it in the chat box. That's my assistant. She's watching. So we're happy to meet with you, chat about your strategy, and then, you know, if you work with the Encore investment team, I match you up with the best agent that fits. Like, I end up with rent-to-own people or credit-challenged people. Wouldn't Eric be a great agent? It fits like that. And Tammy's the detective agent. So we kind of have it covered, is what I want to say. So just thank you for coming and joining us. And hopefully I'll see you next month when we come live with another expert speaker. And thank you, Eric, for
no problem. Thank you.
all your good information. And if anybody needs credit repair, you know where to go.
Yep,
So
for sure.
see you, everybody.
All right. See ya.
I wish you good health.